What's up, millennials? Today we're going to take a look at the valuation of a company called Rocket Lab. And this is a rocket launch company that's going to be acquired by the SPAC that's currently trading under the ticker symbol VACQ. But before we start, if at any moment in this video you're like, what the hell is this guy talking about? Maybe check out my SPAC guide that I released a few weeks ago. It's going to be in the description. Also, if you need access to the Excel sheet I'm going to be using today, you can join our Discord for free. You can just go to nesami.com/discord. Then you can leave your name, leave your email address, and you're going to get access to it. Also, don't trust me, verify me. I'm just documenting my journey here on YouTube. I could be entirely wrong, so always check what I am doing. So Rocket Lab is a rocket launch company, and it's actually just one of the two commercial companies that are delivering rockets to orbit, and the other one being SpaceX, of course. So it is quite an interesting company for sure. It already had 18 launches since 2017. And with regards to the merger date, we don't have any date just yet, but they expect to close the merger somewhere in Q2 of this year. With regards to the pro forma enterprise value and the pro forma market cap, we can see in their investor presentation they are going to have 482.7 million shares outstanding after the merger. And if you multiply that by the amount of, $10 per share, of course, because that's the price they started trading at, you're going to arrive at a pro forma equity value, which is basically the same thing as a pro forma market cap. So the market cap after the merger has been completed. That market cap is going to be $4.8 billion based on $10 per share. We can also see they're going to have 745 million in cash on their balance sheet. So then you can already determine the enterprise value as well by taking that pro forma market cap of 4.8 billion, subtracting the amount of net cash of 745 million, and then you're going to arrive at an enterprise value of almost $4.1 billion based on, again, that $10 per share. Thing is, however, if we go into TradingView, we can see that they're currently trading at $12.75. So that's the number that we're going to put over here in the Excel sheet. And then we can see that the pro forma market cap has already gone up a little bit to $6.2 billion more or less. And again, if you subtract that amount of net cash on their balance sheet, you're going to arrive at this enterprise value of $5.4 billion. So again, based on a price per share currently of $12.75, the company, Rocket Lab, would actually right now be worth $5.4 billion. But we, of course, want to know what a fair enterprise value is for this company. And for that, we're going to apply a very simple formula by taking the revenue of a certain year in the future and applying a certain multiple to that revenue to arrive at a fair enterprise value. And then we can use that enterprise value to arrive at a fair price per share as well at the end of this video. So for this calculation, we're going to need two numbers. First of all, we're going to need a revenue from a certain year. And for this video, we're going to be looking at the revenue of 2025. And as we can see in the investor presentation, well, they expect to have $749 million in revenue in 2025. So that's a number you can put over here in your Excel sheet right next to EBITDA revenue, 749 million. Again, that's the expected revenue of 2025. That doesn't mean that it necessarily has to be that kind of revenue in 2025, but again, it's the expected revenue, of course. Then we're also going to need a fair multiple or a fair range of multiples. And for that, let's actually go to page number 39. Here we can see the valuation benchmarking, as they beautifully call it. It basically means that they compare their own multiples with the multiples of other companies. And again, if you're not sure what this all means, so the multiples, etc., maybe check out my SPAC guide that I released a few weeks ago. It's going to be in the description somewhere over there. So the thing is, we can see over here that Rocket Lab has a multiple based, again, on that price of $10 per share of 5.4x if you look at their 2025 revenue. So again, if you look at that $749 million in revenue in 2025, they actually have a multiple of 5.4x. Because again, if you take that revenue of 749 million multiplied by 5.4x, you're going to arrive at that enterprise value we just calculated in the beginning of this video. The question is a 5.4 multiple fair for this company? Should it be higher? Should it be lower? Well, let's actually just take a look. And honestly, it's going to be a little bit difficult for this company. Maybe one of the most difficult multiples I've done for a company, because as we can see over here, If you look at leading technology SPACs, sure, it does seem on the low end. 5.4 versus all these multiples of Luminar, ChargePoint, QuantumScape, Danimer Scientific, and Proterra. Well, not Proterra actually, but all this, these four companies do have a higher multiple compared to Rocket Lab. However, if we go a little bit to the right, we can see that there are also many space SPACs which have a lower multiple. Unfortunately, that's not the case, or unfortunately, that's just not the case for Virgin Galactic, but it is the case for Black Sky, Astra, Momentus, and AST Space Mobile, which are all SPACs in the space, no pun intended. So, okay, now it's very difficult to come up with a fair range of multiples for this company, because if you look at these space SPACs, you can see that the multiples for these companies are just 2.5x, 2.1x, 1.1x, 0.8x. So then the multiple of Rocket Lab, 5.4x, does actually seem quite high. However, if you look at Virgin Galactic's multiple, it is 18x, but in the footnote we can actually see that this multiple is not for 2025, but it is for 2024. So in 2025, it's already going to be lower compared to the multiple we see on the screen right now. So again, I think it's very difficult to come up with a fair multiple for Rocket Lab, but if we take a look at Black Sky, Astra, Momentus, and AST Space Mobile, these are lower multiples, but I do think Rocket Lab could maybe deserve a slightly higher multiple because they are a company that has already effectuated launches in the past. They already have, what was it, I think 17 or 18 launches in the last couple of years. So that does probably give them an advantage. They already have revenue as well compared to the other space SPACs that do not have any revenue. So that might mean they deserve a higher multiple instead. So what I've done is I've come up with a range of multiples of 4x on the low end, 6x on the high end. And honestly, this might even be still on the high end, to be very honest with you. But again, if you have this sheet yourself, you can just change it. You can just play around a little bit with the numbers, which we're also going to do in this video later on. Okay, enough talking. Let's go to the calculations, because you're of course here for that. Well, the Excel sheet is going to take care of basically all the calculations for you. What it's going to do is it's going to take that revenue of 2025 of 749 million, and then it's going to apply first of all the low multiple of 4x, which we just decided to use, and then it's going to come up with this enterprise value of 3 billion. So basically 749 million times 4 gives you an enterprise value of $3 billion. Then you can also do that for the high multiple, so the high valuation. That is simply by taking that revenue of 749 million, multiplying it by 6, so our high multiple. And then you're going to arrive at a high valuation, a high enterprise value of $4.5 billion. Well, if we then also take a look at the midpoint valuation, which is simply going to be the average between the low valuation on the one hand and the high valuation on the other hand, then we're going to see the midpoint valuation is a little bit more than $3.7 billion. So very well, those are those enterprise values, but of course we want to know what a fair price per share is going to be. Well, to do that, we first need to go back to a fair market cap. How do we do that? Well, basically very simple. The only thing we need to do is to add back the amount of net cash that they are going to have on their balance sheet. Because in the beginning of this video, we said that the difference between an enterprise value and a market cap is the amount of net cash they're going to have on their balance sheet. And we said that that was going to be $745 million in cash on their balance sheet. So then you can simply take those enterprise values, the low, midpoint, and high valuations. You can add that amount of net cash, and then you're going to arrive at these fair market caps for this company, Rocket Lab. For the low valuation, we can see that you end up with 3.7 billion. For the midpoint valuation, 4.5 billion, and for the high valuation, 5.2 billion, more or less. So then you can take another step and say, okay, very well, you have these market caps. Let's now divide them by the amount of outstanding shares after the merger to arrive at a fair price per share. Well, if you do that, if you take these market caps, divide them by this number, 482.7 million shares outstanding after the merger, you're going to arrive at these fair prices per share. We can see they're relatively low. So for the low end, you would arrive at a valuation of $7.75. For the midpoint valuation, $9.30. For the high valuation, $10.85. Again, keep in mind, these valuations seem pretty low, but it might actually not be unfair, to be very honest with you, Because again, we've been taking a look at a range of multiples of 4x and 6x on the high end. And if you look at the other space specs out there, this was already a quite high range of multiples. Let's actually just very briefly play around a little bit with these numbers to see what kind of changes you end up with. So let's, for example, say you're going to end up with a higher range of multiples. Maybe this company is just way better compared to those other space SPACs. Maybe this company deserves a higher range of multiples. So let's just try and see what happens if you, for example, use 7x on the low end, 9x on the high end. Well, then your fair prices per share are going to increase a little bit, as you can see. It ranges between about $12 and $15.50, more or less. But also, if you go to a lower range of multiples, if you say, well, I think Rocket Lab is actually comparable to those other space SPACs we've been looking at, so Momentus and ASD Space Mobile, etc., etc. And you would say, well, maybe this only deserves a multiple range of 2x on the low end, 3x on the high end. But then your fair price per share is only going to be between $4.65 and on the high end, $6.20. Another interesting thing to note might be that Virgin Galactic currently has a market cap of $7.2 billion according to Yahoo Finance, and as we just calculated, Rocket Lab has a pro forma market cap of $6.2 billion. So the difference between Virgin Galactic and Rocket Lab is not that large, but I do kind of think that Virgin Galactic does kind of deserve a higher market cap compared to Rocket Lab. So as you might have noticed, I find it quite difficult to put a fair multiple range to this company Rocket Lab, and I actually do think that this company is already overvalued. Now, of course, don't trust me, verify me, always check what I'm doing, check if everything is alright, if the calculations are alright, if you are agreeing with me with regards to that range of multiples, if those are fair or not. And also keep in mind, we have been taking a look at assumptions. We've been taking a look at a predicted revenue number. Maybe that revenue is going to be way higher, maybe it's going to be way lower, we just don't know. And we've also applied a certain range of revenue multiples, as I've already mentioned. So if you change one of those variables, then the entire calculation is going to change and your fair price per share is going to change as well. So let me know in the comments, what do you think is a fair range of multiples for this company to arrive at a fair price per share? And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!